Every year, the UK government offers a tax-free savings opportunity, the Individual Savings Account, or ISA. You can save or invest up to £20,000 without tax deductions. This is a chance to grow your wealth, whether for a house, education, or retirement. But are you maximising this opportunity? Many default to a cash ISA, which feels safe but may not keep up with inflation. Is your money truly growing or losing value over time? By sticking to the safe option, you might miss out on significant growth. Imagine your £20,000 working harder for you. The difference between a low-interest account and a strong investment can be life-changing. Understanding your options is crucial. Today, we'll explore your ISA choices and why the government encourages investing in shares. The Chancellor is urging more people to consider investing. Is this a chance to boost your wealth or a risky move? Let's uncover how to make your £20,000 work as hard as you do. Stay tuned to find out. At the core of this debate are two approaches: saving versus investing. The cash ISA is a tax-free savings account, offering safety and predictability. Your capital is protected, and returns are steady. It's ideal for those needing short-term access to funds. On the other hand, the Stocks and Shares ISA offers higher growth potential. You invest in shares or funds, and as companies grow, so can your investment. This is how many build long-term wealth. However, with potential reward comes risk. The stock market is volatile. Values can drop. You might get back less than you invest, especially in downturns. This risk makes many hesitant, opting for cash's safety. Yet, inflation erodes cash savings, and the government encourages investment. To choose wisely, understand both options. We'll break down the mechanics, risks, and rewards. Which path suits your financial future best? Let's explore. What is an ISA? It's a tax-free wrapper for savings or investments. This wrapper shields your money from income and capital gains tax. All growth is yours to keep, a government incentive to save. Each tax year, you get a new £20,000 ISA allowance. Use it or lose it. It doesn't carry over. This tax-free status is powerful. In regular accounts, taxes can eat into returns. The ISA wrapper lets your money compound effectively. It's a personal account. You can't share your allowance. Your partner also gets their own allowance. As a couple, you can save £40,000 tax-free annually. Understanding this concept is key to maximising your savings. Make your money work harder with this tax-free advantage. The ISA is a tool for building wealth. Use it wisely to achieve your financial goals. Let's dive deeper into how to make the most of it. Let's explore the different ISA options. ISAs aren't one-size-fits-all. They cater to various goals and risk levels. The cash ISA is for savers, offering tax-free interest with low risk. The Stocks and Shares ISA is for investors, with higher growth potential but more risk. It's ideal for long-term goals like retirement. Beyond these, there are specialist ISAs. The Lifetime ISA helps save for a first home or retirement with government bonuses. You can save up to £4,000 annually with penalties for early withdrawal. The Innovative Finance ISA involves peer-to-peer lending, offering higher interest but more risk. A new British ISA is planned, with an extra £5,000 allowance for UK investments. You have choices. Mix and match ISAs to suit your needs. Each type serves different financial strategies. Understand your options to maximize your tax-free savings. Choose the right ISA for your goals and risk tolerance. Let's see how these options can work for you. Make informed decisions to grow your wealth. ISA rules evolve. Staying updated is crucial. For 2024-2025, new flexibility allows contributions to multiple ISAs of the same type. Previously, you could only contribute to one cash and one stocks and shares ISA. Now, you can shop around for the best rates and platforms. This change is a game changer for savers and investors. Open multiple ISAs to maximize benefits. Transfer money between ISAs for better rates or lower fees. Use the official transfer process to retain tax-free status. Most ISAs are flexible. Withdraw and replace funds within the same year. Check if your ISA offers this feature. Understanding these rules helps manage your money effectively. Ensure every pound works hard in its tax-free wrapper. Stay informed to make the most of your ISA. Adapt to changes for optimal financial growth. Let's explore how these rules impact your strategy. Make your ISA work for you. Let's explore the cash ISA, a familiar option. It's simple. You lend money to a bank, earning tax-free interest. This interest is yours to keep, free from tax. Cash ISAs offer security and predictability. Ideal for short-term goals, like a house deposit or wedding. Your capital is safe, and returns are guaranteed. Different types affect growth: easy access or fixed rate. Easy access offers flexibility, but lower rates. Fixed rate locks money for higher interest. Cash ISAs grow modestly, linked to economic conditions. Rates have been low historically, offering slow growth. It's a gentle stroll, not a sprint. Safety is a trade-off for higher growth potential. Understand this balance when choosing a cash ISA. Make informed decisions for your financial goals. Let's see how cash ISAs fit into your strategy. 1. Stocks and shares. ISAs let you invest up to £20,000 each year in shares or funds, making you a part owner of businesses. Growth comes from rising share prices and dividends, which you can reinvest for compounding returns. But remember, investments can fall as well as rise, so you could get back less than you put in. Stocks and shares. ISAs are built for long-term growth, but expect some bumps along the way. Cash ISAs are perfect for short-term goals. Think saving for a house deposit in 2 years. Your money is safe, predictable, and protected from sudden market drops. But for long-term plans, like retirement, stocks and shares ISAs shine. Over 5 years or more, they can outpace inflation and grow your wealth far more than cash ever could. The key? Match your ISA to your timeline and financial goals. When choosing an ISA, don't forget inflation, the silent thief that erodes your money's value. If your savings grow slower than inflation, you're actually losing money, even if the number stays the same. Stocks and shares. ISAs aim to beat inflation over time, while cash ISAs offer safety but may not keep up. So ask yourself, do you want certainty or a better chance to grow your money's real value? Why is the government so eager for you to move your money from cash ISAs into the stock market? It's about more than your personal wealth. When you invest in UK companies, you provide vital capital that helps businesses grow, innovate, and create jobs. The goal, a nation of owners where more people have a direct stake in Britain's economic success. Your investment isn't just for you, it's a vote of confidence in the UK's future. The government encourages investing to ease long-term financial pressure on the state, as the ageing population strains the state pension system. By promoting private wealth through stocks and shares (ISAs), people become less dependent on the state in retirement. Building personal savings also helps cover costs like social care, reducing demand on government services. Ultimately, a nation of financially independent citizens eases the burden on future taxpayers and strengthens the economy. The government is introducing a new British ISA, an extra £5,000 tax-free allowance for investing in UK-listed companies, on top of the existing £20,000 limit. This aims to channel billions into the British stock market and encourage savers to back UK growth. But remember, focusing only on UK investments carries risks. Diversification remains key for building wealth safely. Let's look at real numbers. Imagine you put £20,000 into a cash ISA at 4% interest. After 1 year, you'd have £20,800, guaranteed and tax-free. Do this for 5 years, and your savings could grow to over £112,000, all risk-free. After 10 years, you might reach £250,000, with £50,000 in tax-free profit. It's steady, safe growth. But remember, cash ISAs offer security at the cost of higher returns. Let's see the power of compounding with a stocks and shares ISA. If you invest £20,000 each year and earn an average 7% return, your pot grows much faster than a cash ISA. After 5 years, you could have around £122,500, over £10,000 more than a cash ISA. Over 10 years, your profit could reach £90,000, tax-free. That's the engine of wealth creation, time and compounding working for you. We've looked at nominal returns, but what really matters is your real return, how much your money grows after inflation. Inflation quietly erodes your purchasing power, so a 4% return in a cash ISA is really just 2% after inflation. With stocks, a 7% return becomes 5% in real terms, much healthier growth. In a world with inflation, standing still is moving backwards. Many fear investing because of the risk of losing money, but it's vital to know the difference between volatility and permanent loss. Volatility is just the market's natural ups and downs, scary, but usually temporary. Loss only becomes real if you panic and sell at a low point. With a diversified fund, permanent loss is extremely rare. The real long-term risk: inflation quietly eroding your cash savings. When it comes to building wealth, the stocks and shares ISA almost always outperforms cash ISAs over the long term. Compounding returns make a huge difference. Over a decade, the gap can be tens of thousands of pounds. It's like the difference between a steady walk and a powerful sprint. If you want to grow your money faster for the future, stocks and shares ISAs are the engine designed for the job. So, stocks and shares ISAs are great for long-term growth, but cash ISAs still matter, especially for short-term savings and emergencies. For goals like a house deposit or emergency fund, the security of cash is essential. Often, the best strategy is a mix. Use cash ISAs for immediate needs and stocks ISAs for your future. Choose the right tool for your goals and build a plan that protects you now and grows your wealth long term. So, we come back to the original £20,000 question. Cash ISAs offer safety for short-term needs, while stocks and shares ISAs bring long-term growth, but with more risk. For many, a mix of both gives the best balance of security and growth. The secret is making conscious choices. Don't let your allowance go to waste. Your future self will thank you for the decisions you make today.